Hey everyone and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So, as you can see, Tesla stock did have, a not so quiet week. It went up, it went down. We had that report that came out from Bloomberg that said that, the 888 robotaxi event is being postponed for about 2 months. Now, more on that a bit later. So basically, Tesla stock closed out the week flat week over week. Of course, there's still that huge gap. Now, if something bad happens and we do drop a lot, then I would say that the next point we should be looking at is around that downtrend line, which is at $210, $212. The moving averages are the 200-day one at $198.7, the 50-day one at $191, and the 20-day one at $206. RSI is pretty high, but not overbought. Of course, later this month, we're going to have the earnings report, earnings call, in my opinion, much more important than a product unveiling event. But that's just me. Anyways, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so let's first start off with the so-called Model Y refresh called Project Juniper. This was a picture taken, I believe, a week or so ago. Now remember, Elon Musk said there is no Model Y refresh coming anytime soon. But as we know, with the Model 3 refresh, we have already seen pictures leaked, or some people have found the Model 3 refresh, a long time before it officially released. Maybe we're going to see it in the second half of 2025, could be. This is a rendering on the right. This is not a real product or image. This is just a rendering, basically taking the look of the refreshed Model 3 and putting it on a Model Y. Looks pretty good in my opinion. Then moving on to the Tesla weekly insured number. So the first week of the quarter was a pretty good one, 6,500. And as you can see, that's a great start compared to the previous quarters. Now, of course, as you know, this year we're still behind last year, but if we can continue this pace, I think we could reach last year's record. Now, if we look at the overall China car market with BEV adoption, you can see that we're still quite high despite a huge slowdown, right? We're now 28%, and that's with the huge slowdown in China. So still pretty good. Looking at Tesla's market share in China, that remains stable. And so let's move over to some analyst comments on Tesla. Of course, most of them are now pretty positive, other than a couple of people that say that FSD does not exist, even though I personally experienced it for the first time last week. But okay. Anyways, we've got here Goldman Sachs. They raised their Tesla price target to $248 from $175. The comment here, analysts view Tesla as a leader in AI and software technology within the automotive sector, with software and services potentially contributing significantly to Tesla's earnings by 2030. However, they note that achieving a level 3 version of FSD will take more time. Of course, you can debate whether or not you think that the current FSD version is level 3, level 4, even though you still need to be in the driver's seat, even though you still need to keep your hands on the wheels. I think Tesla's FSD can do much more than just a level 2. Moving to a Citi analyst, they have increased their Tesla price target by 50% to $274 from $182 while keeping a neutral rating. It definitely has zero to do with the fact that Tesla stock has increased so much in the last month. So the comment here, the analyst has been more constructive on the near-term investor sentiment around Tesla, but says the strong stock run-up adds greater reliance on looming electric vehicle product and AI catalysts. The Q2 delivery beat was also encouraging, which prompts increased estimates and supports Citi's underlying call for improving EV sentiment this summer. However, the firm believes core EV fundamentals alone are unlikely to support significantly further upside from here in Tesla shares absent new product and AI catalysts. Again, I don't like the word catalyst. I've seen many money managers and analysts use, we need this catalyst or we need that catalyst. Not really, no. You don't need catalyst for the stock to move. What do you need? You do need continued execution in the business, continued innovation. The pace of innovation needs to be much higher than the competition, and with Tesla, that's definitely the case. I don't want, headlines, Tesla has announced a new product, so here, that's a new price target because that product will be launched 2 years from today. To me, that doesn't make much sense, which is also why I think that the delay in the robotaxi event of 2 months is a nothing burger. Then moving to our favorite analyst, Adam Jonas. Of course, you can pause the screen and read all of it, but I'll just focus on the main points here that were mentioned. So Tesla Energy has garnered heightened investor interest over the last few weeks within the context of 1. Generative AI acceleration spurring a multi-generational increase in energy demand, and 2. A approximately 2x beat in Q2 Tesla Energy storage deployments. With our updated forecast, Tesla Energy is nearly at parity with Tesla Core Auto in the sum of the parts valuation. I mean, we've been talking about the energy side of the business, how it is overlooked, and now you're seeing that Wall Street is starting to wake up to the fact that the Tesla energy side of the business can become bigger than the car part of the business. But okay, it will take time because yes, it's true, the majority of Tesla's revenue right now still comes from selling cars. But as we've seen before, Tesla Energy is growing much faster, also has higher margins. He continued by saying that for the first time in memory, the majority of the more than 20 client Tesla Bull Bear lunch attendees believe that the next $50 move in the stock is higher rather than lower, with a majority expecting the stock to outperform the market through year end. More thoughts from the note. At the same time, the vast majority of attendees said they did not own Tesla stock in their portfolio in any meaningful size. Of course, that can change after the next earnings report and maybe towards the end of the year as well, with that robotaxi event, which by the way has still not been confirmed to be true or false, the report from Bloomberg, so it might well happen in August. Adam Jonas continued here, there was one other thing about yesterday's lunch that I actually didn't realize until a client brought it to my attention later that afternoon. The core auto business barely came up at all. For 90 minutes, we talked about energy storage, humanoids, AI, FSD, China, geopolitics, and the 8.8 robotaxi day, invitation still not received. Well, I believe this note was sent out before the Bloomberg report, and other topics. The topic of car was almost completely absent from the discussion. Maybe they are starting to pay attention. He ends by saying here, Tesla is a car company, but in our opinion, it is just now starting to get more institutional investor attention about its other capabilities, including energy, manufacturing, AI, and robotics. Cars are just one of many form factors of embodied AI or robotics. I think all of my viewers, including myself, agree. Last couple of things here. This is great news for US car shoppers. So Tesla has introduced the Model 3 long-range rear-wheel drive in the United States. Starting price $42,490 or $34,990, including the Fed EV credit. Which now means you have the Model 3 rear-wheel drive for less than $40,000, the Model 3 long-range rear-wheel drive for less than $35,000, Model 3 long-range for less than $40,000, and the Model 3 Performance at $47,490, all available in the US. Then with regards to a product that was promised and was delivered but late, so it is real, and that's the Cybertruck. In June, the Cybertruck was the best-selling vehicle priced over $100,000, average transaction price $112,696, with more than 3,200 units sold. Despite prices trending higher, EV sales in Q2 improved versus Q1 and were higher year over year by more than 11%. In fact, 330,000 EVs were sold in Q2 in the United States, a record quarter for electric vehicle volume, which bodes well for the second half of the year because the first half was definitely punishing. More people were looking, to ICE vehicles and hybrids. Maybe that has changed right now. But also it's crazy that the fact that the Cybertruck was the best-selling vehicle priced over $100,000, and this is just the start. And Elon Musk responded to that report. Cool. Last two things here. Lithium-ion battery prices are dropping extremely fast, which is good for every EV maker. If we're talking here about Tesla, we're talking about margins. Margins, in my opinion, might have bottomed not just because prices of the cars are stable, but because of the cost to build cars, cost to have those batteries have been reduced as well. And lastly here, the Bloomberg report. So Tesla delays robotaxi event in blow to Musk autonomy drive. Car maker will show vehicle in October rather than on August 8th. Okay, when this came out, the stock plunged, but also the overall market went down. So I don't know how much of an effect this had on Tesla, because on Friday, the stock basically recovered. Now, there were also some reports that said that it's because they had nothing to show for, and then some other reports that said it's because they needed to tweak some designs of the car, which in my opinion is quite encouraging, because that means that we might actually get a real demo. Now, two things here. One, on the left, based Beth Bezos, this is a mouthful, this is a full stack AGI integration play for Elon. Energy from Tesla, data X plus Starlink, probably also from Tesla as well, compute XAI, also Tesla in my opinion, and then robotics, you've got Tesla. To which Elon responded, the new Optimus design, which will be complete later this year, is something special. So, here's my thought. Maybe, and this is what I tweeted out here, new Optimus design later this year. Elon's comments about the new vehicles during the Tesla Q1 earnings call. So we expect it to be more like the early 2025, if not late this year. So, robotaxi event could also be later this year. Now, whether the Bloomberg report is true or not, I wouldn't mind waiting for a banger event later this year. Imagine we have an event where they show us a demo, they also show us a new Optimus design, and then they do a one more thing, right? The Apple thing. And they show us the next generation car, not robotaxi, available to order right now, getting delivered in the first half of 2025. I mean, that would be worth waiting 2 extra months, right? Of course, I might be making stuff up because we still have no confirmation on whether or not that event is postponed or not. Remains to be seen, in my opinion. If it's not postponed, they should just ignore it and have the event on August 8th. And if it is postponed and for the good reasons, then so be it. Let's wait another 2 months and we're getting probably a much better event than what we would have gotten on August 8th. And to be honest, doesn't really matter, because whatever, they will show us that demo, that robotaxi thing. It, in my opinion, will not have any effects on Tesla's business, financially wise, in the short run. It will probably take a year or two until we actually see something. For the rest, for the potential next generation vehicle, if that will be revealed, then of course that will have a more positive effect on the business in the short run as well, early 2025. But of course, that all remains to be seen. This is just speculation from my part. Do let me know what you think will happen in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.